Wow, I'm glad I dumped that call. All right, this bounce. Yeah, this doesn't look like a continuation. Like this isn't gonna. I don't think this bounce is gonna remain bullish. Yeah, the longer term trends still look like momentum skewed really bearish. So this is probably some put profit taking. That looks pretty close to topping out. There, I guess. There should be okay. We're seeing the put side profit taking, or yeah, this looks like put side profit taking. 25 to 30% might be better. This is the second time I've been stopped out, and the stock goes insane. Today would have been amazing for me, but I only made $20 profit using 2K money. It's gains, I guess. And where did you get stopped out? I think that's the most important question to ask yourself. Not your stop itself, but where? Like, did you buy puts here? Did you buy puts here? What time did you enter the position? Were you stopped out on the gap up? Profit taking a drift to FOMC and then downs? I don't know if we're going to get that much drift. Like, there's still some bearish momentum. Calls are selling off pretty hard. And don't forget that the FOMC is just the minutes. It's not a meeting. It's not, an economic report, nothing. It's simply the minutes from the last meeting. There's, generally speaking, very little content above and beyond what the market is already aware of. You get the Fed's dot plot that comes out today that's not currently publicly available, but we already know the expectations for that dot plot, right? The assumption that dot plot makes is that core inflation was going to go down at a rate equivalent to headline inflation. That's not true now. Core inflation is up over headline. Inflation is becoming entrenched. It's bearish as fuck. I don't think people realize the full scope of it. I kind of tried to break it down into simple terms this morning, but there's significant repercussions on like dollar value, which then has repercussions in oil, which feeds back into inflation. Right. And so a higher rate of stable inflationary measures, surpassing more volatile ones, generally has a feedback effect into volatile inflation measures. And then, so headline will surpass core, like at some point. Right. The last time core inflation was rising faster than headline inflation was January of 2021, before inflation surged up. Right. So like, core basically means durables. Right. So durables are rising, which means that consumer demand is up. Well, let's not say up, but persistent. Right. Which means manufacturers are scrambling to feed the demand, right, by creating supply. So this feeds back into the manufacturers, and then that feeds into the supply chain. So now more demand on the supply chain, which then raises the price of durables, right? And so this kind of feeds through, but then also supply chains are international, right? They're a global effect. And so supply chain costs going up increases foreign inflation, and foreign inflation, unlike US inflation, is mostly driven by energy costs, right? So when their durable costs go up, it can spike their inflation a lot harder because their metrics are skewed towards the more volatile, like food and oil metrics, right? So this can increase foreign inflation, which then causes foreign central banks to react. So let's say hawkish central bank policy, right? And then hawkish central bank policy from foreign banks leads to a drop in dollar value, which then leads to higher US oil prices, as we import most of the oil we use. Which then leads into headline inflation going up. Right, and then that obviously prompts stronger action from the Fed, right? Because now you have a feedback loop that is created not only higher persistent inflation, but higher volatile inflation. And so the Fed now needs to act to bring down entrenching inflation. They need to act to bring down future headline inflation, and they need to act to increase dollar value. So, fun lesson in macroeconomics there. It does look like a Charlie Day meme, but there's a lot of moving parts in the world economy.